Morning, everyone. Good to be back. It's 8:40 on Friday the 17th, and just in case you don't know and don't look at the calendar that I publish every week in the Market Insights, September 17th tends to be the day where the market starts to perform badly in this September through October. Now, just for clarification, there are two things I want to bring out. First of all, we're talking about overall market action, and in fact, the numbers tend to be very small in this survey, AAII sentiment survey. And so when we see the net changes, sometimes they talk about a month being the worst month of the year and the change is 2%. We have 2% moves from high to low almost every day, certainly every week. So um, that's something that you should be aware of. But those AAII numbers were amazing. Bulls 22.4 down 17 and a half. Bears 39.3 up 12.1, and neutral, or I can't make up my mind, 38.3 up 4.4%. So you know, take all of this with a grain of sand, and you know, because sometimes when you look at some of these statistics, unless you dig down into the numbers as I do, they're somewhat misleading. Asia is slightly higher closing out the week. Europe slightly lower closing out the week, with the exception of Spain, which has managed to have a small rally. Again, 1%. We had, while I was gone, we had retail sales, which were up here but down in the UK. We had continuing claims, which was down slightly, while initial claims were up slightly. Okay, news, General Motors. You remember when everybody was so excited about GM, even before the chip shortage, about how many great electric vehicles they were going to have and how they had it figured out and they were going to, set the world on fire. In fact, they are setting the world on fire with their Chevy Bolt. And now their recommendation, after a 100% recall, is not to park your Chevy Volt within 50 feet of your home or another car. So, you know, they got all caught up and said some things that, frankly, just aren't true. They don't have the technology in hand, they don't understand the battery situation, and now anybody who owns a Bolt is going to have to pay for it. Okay, one that I mentioned um, last week and then earlier this week, IRNT, that's IronNet, that's a cybersecurity. It has moved from $19.10 to a high yesterday of 47 and a half, closing yesterday 41.40, up 927. For the week, this is up $14 and change, or 71%, even though today it's currently trading 36.52, down 4.88, or 12%, still up 71% on the week. Couple of downgrades. BMO downgrades T2, TTWO. Last is 150 and a quarter, down 165, nothing overwhelming. Cirrus Logic downgraded to underperform from neutral at Bank of America, 85.87, down 230. And this is kind of an interesting one. CRE, CREE. This one was downgraded at Bank of America also, and it's trading 85.81 down 247. And the funny thing about this, then by the way, the stock has moved from a low of 27 to a high of 129, so 85 is somewhat mid-range. What's interesting here is I'm wondering if this company is their problem is their success. Cree does LED light bulbs that last supposedly from 12 to 15 years. So I'm just wondering if the resale of those bulbs or the sales of those bulbs has fallen off because they last so long. So we'll see whether they're a victim of their own success or not. The stock is down, as I said, $2.50. And historic, the last Sears store located in Illinois is closing today. This is a company that Eddie Lampert, who was a fund manager, has absolutely raped and pillaged all of the assets here. Excuse me. It started with their real estate, and of course, that fabulous merger of two crappy companies, Sears and Kmart, into one gigantic crappy company, and has continued to slide while Mr. Lampert has made a ton of money liquidating all of the assets, including things like the Sears Kenmore brand and the Sears Tool brand. So, last Sears closing. Okay, so the futures are showing the Dow down about 26. It's been up 75 to down 75. S&P down about 3.25. NASDAQ is a little softer than that. Currently down, it looks like, down about $4 now. So that has rallied back from down 40. In any event, there you go. Chart on the screen is the gold, which again broke yesterday. Let's go to the daily and see how severe. As I have been talking, we had this low in the 1780 area and the high just over 1810. We failed again up here on Tuesday and Wednesday, 1810 high, 1808 high, and then yesterday when we broke that 1780, we continued straight down to 1745, closed 1756 down 38. This morning we are up, but only slightly, nothing to be excited about. And if we can't get back into that 1778, 1782 area in the next day or so, I think we could probably test that 1720 again. So not a pretty picture in the gold or the silver. We have grains pretty much unchanged after the big rally in oil. We're down 31 cents. The biggest drop, of course, is here in the nat gas, which has just been explosive to the upside, but looks like it might have temporarily topped up here at 565. Remember, that was a move since mid-August from 375 to 565. That's an enormous move for a commodity to make. I've heard people talking about how it has to hold 5 on the way back down. My number is a little lower. I think if it holds 475, that would be enough, and I certainly wouldn't short it. But as you've listened to me over the last year, I'm wildly bullish on nat gas, Tellurian especially, but we'll see how that one pulls back in. As far as others, We have copper is up a little. We have the dollar is down a dime, and both Bitcoin and Ethereum are lower, and the bonds are lower. All right, everyone, have a good day. Be careful out there.